Hi. The stock market refers to public markets that exist for issuing, buying, and selling stocks that trade on the stock exchange or over the counter. OTC refers to the process of how securities are traded by a broker-dealer network as opposed to on the centralized exchange. A centralized market is the financial market structure that consists of having all orders routed to one central exchange with no other competing market. India has multiple centralized markets like BSE, NSE, which are regulated by the SEBI. Let's understand how the stock market works. In a nutshell, stock market provides a secure and regulated environment where market participants can transact in shares and other eligible financial instruments. There are two types of markets, primary and secondary. Primary market, companies can issue and sell their shares to the common public for the first time through the process of an initial public offering, IPO. This activity helps companies raise necessary capital from investors. It essentially means that a company divides itself into number of shares, for example, 20 million shares, and sells a part of those shares, say 5 million shares, to the public at the price of, for instance, $10 per share. If everything goes according to the plan, then the company will successfully sell the 5 million shares at the price of $10 per share and collect 50 million worth of funds. And the secondary market, after the stock or securities of the company have been sold in the primary market, they are then traded in the secondary market. Investors trade previously issued securities without the company's involvement. Some important terms in the stock markets, like bull market and bear market, these markets are based on the sentiments of the investors. A bull market means the share market is rising and investor sentiment is confident, further encouraging for investors to buy. Generally, when the share market is bullish, the economy is strong and unemployment is low. The bear market is the opposite of bull market. That means if the market falls after the high, it has become a bear market, which is generally marked by investors' pessimism, which can cause prices to continue falling, adding to further negative sentiments. I hope this information was useful to you. Thank you.